Good morning, everyone, and welcome to Nadex Morning Analysis, where we look at potential hotspots in the markets for the day. I am Todd Rich with Nadex. With me, as usual, Brian Caprice from Keep Trading Simple. It is Wednesday, September 22nd, and it is Fed Day. So we certainly have some things to talk about. Before Brian and I jump over to it, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And lastly, this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. Now, I mentioned that it was Fed Day. It is also Oil Inventory Day. So, this is really what we're going to be talking about today. First, Brian and I are going to talk about the oil inventory report that's coming out at 10:30 Eastern. It says 9:30 up here, but that's because I'm in Central. So 10:30 Eastern. So we're going to look around how you could potentially look for an opportunity going into that oil inventory report. I think Brian will do a quick little synopsis of what he covered yesterday in our boot camp, knowing that the video from his session, the recording, will be available probably on the YouTube channel, the Nadex YouTube channel, sometime tomorrow. But we're going to go through that. And then, of course, what everyone's talking about today, big red, it is the Fed day. The Federal Open Market Committee is going to be talking about their economic projections, what they're seeing in the economy, what they expect to see. They're going to make any interest rate decisions. Now, no one expects any interest rate changes today, but what they're going to be talking about are two things, the two mandates of the Fed. One, inflation. Yes, we've got some inflation. And I know they've used the word transitory, Brian.
Don't even say it, Todd. Don't even say it.
Just a little bit. The other is unemployment, and we did get clipped pretty heavily through the pandemic. I think about half of those jobs have come back, and things are heading in the right direction. But the Fed's weighing both of those, and what we're going to hear from them really is when they are going to start tapering their purchases, when they're going to slow down the purchases of certain assets, so that which is they've been using to stimulate the economy. I think they want to broadcast that so there's no surprises. But they're going to talk about the plans on that, the timing of it, which assets they're going to slow down their purchases on first. And we are going to get a glimpse into 2024, where some of the Fed presidents are thinking about their ideas on where interest rates might need to be if they're going to start ratcheting up interest rates. And eventually that's going to happen too. But I think they want to broadcast it. I don't think they want to do any surprises, although there's differing opinions on how that could play out. So that's really what we're going to talk about today. I kind of gave you a little bit of a longer intro today because we do want to talk about oil and we do want to talk about FOMC because that is the topic of the day. So Brian, I'm going to flip it over to you and let's talk about what they could potentially be doing going into that oil inventory report at 10:30
Yeah,
Eastern
so
morning.
I would say 10:30 is the first big one. The forecast finally came in at minus 3.3 million barrels. That's decent. I forgot to pull the oil inventory up for the API one. Hold on, let me pull it up real quick and see what the API number came in as. And yeah, the API number came in as expected. Well, as expected, I expected it. Down 6.1. So quite a big difference there in what the expectation was yesterday versus what the forecast was, or what the actual versus the forecast was. So, that's kind of set us up like we're probably going to have a miss today. The question of how much, that's the question that we don't know. So we'll see. But it's listed as minus 3.3, and they came in as 2.4. So they were already off by $1 million over there. So again, 3 times as worse. Looking at what oil did in the overnight. Really, since the API number came out, again, yesterday afternoon, we saw, let me go back to a 30. I was like, wait, there's too many candles. We basically saw it run up from that. And again, as you would expect, in the European session, it really didn't do much besides kind of roll off a prior level of sellers in the 30-minute. I would say, looking at kind of the, historical view of this is a very small amount of movement in the European session. The question is, and we've had this in the past as well, are all our eyes going to be really focused on FOMC because that's going to be the driving force in the economy, not necessarily oil right now? So, again, we've seen this where it's been very, very small. Does it mean that there's not going to be a big release? not really. But with it coming back down again, I do kind of like the prospects of it. And don't forget, we talked yesterday. Yesterday's presentation was really about how to trade the oil news release. As you guys know, it all starts. You can do the homework ahead of time, and looking at the 30-minute level. That would definitely be one of the levels that we focus on. Another one being really kind of down in this level right here would be right now the opposing side to it. So those levels are coming in, and again we've had a confirmation, so it's not ideal. We typically like it untested, but 71.68 on the top side, and then the an easier level to see is the 71.14 on the downside. So remember, again, just like a quick 15-second recap of yesterday. We start on the 30-minute. We get our levels drawn about a half hour to 15 minutes, so a half hour ahead of time. We drop it down to the 5 and see if we can start refining these zones. And again, there's probably two little small zones in here that we'd see on a 5-minute. Too early to do it right now. We do it in about 2 hours from now. Actually, not 2 hours, hour and a half from now. Right. And then again, we drop it down to 1 minute, the last minute. So if you guys are totally close, what I'm talking about, when Todd puts the videos out, you guys can watch it there and get the strategy there as well. So, but that's, I would say right now with the small movement, it is lined up. It's kind of like a spring. So it is set. Again, the one caveat today is there may not be as much movement just because FOMC is such a big deal. If they start raising interest rates and talking about accelerated tapering, remember, there's some people like, yeah, we'll push it off. And that was last meeting. We're running out of months to do it in 2021 So
only a couple of them left.
Yeah, and the guy that said I'm gonna, he's like, yeah, I think we should push it back a little bit because we had that one. We have had one number that has messed it up. But he said once we start, it needs to be very, very fast and it needs to be all done. So again, we only got two more of these, really two more of these meetings to go. They're going to start doing it soon. And again, what we've seen with retail sales last week, it was really good retail sales numbers. So
we're gonna, I think we will, or we should at least get a pretty good picture today on what they're looking at, what their concerns are, where inflation is, where unemployment is, and then a timetable. Hopefully, we get some type of clarity there. The question is, one way or the other, based upon what people see and hear, we don't know how the market is going to react. Right? The market's going to do what the market's going to do. We don't know if equities are going to go great. Finally, the mystery's out of it, or they're going to say, "Oh my God, here it comes! I hate this." We don't know if this is going to take off or go down, so, or collapse. So, or it could be a big nothing. I really don't know.
Yeah, right now, this is the dollar index. Right now, the market isn't actually sure what's going to happen.
Right.
Again, the currency market tends to have a better read on these things. And again, the dollar index in general, dollar index is completely flat, done absolutely nothing now, basically for 2 days. We've been stuck in the same range. I think, they all know it's coming. And again, we're not really talking interest rates. We're talking about tapering as being the first step and how fast taper will be. But again, even on the currency front right now, which normally front runs these things, you're not really seeing it. Gold right now is at zero. It's moved 0%. So, yeah. So even gold is kind of at a standstill where it's kind of like we don't know what they're going to do. It's kind of a crapshoot because, like I said, you get that one number. If they're gonna kind of balk on tapering because of one single number, and then we blow retail sales out of the water, it's kind of like, what are you going to do here?
Right. Something's going to. I think they should give us a timetable. Again, we just don't know how people are going to react. So, given that, can we take a peek at some of the equities charts? And all right, well, if they love it, where are some levels to the top side? Or if they hate it, where are some levels potentially to the downside? Just to be
and the question, and here's the thing. Tapering is definitely coming. There's no scenario where we don't do a taper or don't do an interest rate change next year. So the market knows that it's coming. It's the timeline of how fast it's going to happen. Neither of those two things does anything to support the stock market. It's good for the overall economy. And again, remember that kind of pullback is not bad. It's supposed to happen. We're long overdue for it anyway. And we're not going to stay at 0% interest rates forever. It has to go back up again because that's, we've seen what happens when it doesn't. So it's kind of more of a, I would say there's not many upside scenarios. Maybe they can say we're still seeing weakness.
That's the question. Was the Evergrande sell-off, which seems to be people, that's the excuse everyone was using. Oh my gosh, there's going to be contagion. Evergrande. We're going to see another Lehman. Meanwhile, Lehman was pretty big, and they had no assets. I mean, Lehman was bad. Evergrande, I don't know if was that an excuse? Was the move down earlier in anticipation of what was coming today? I don't know.
No, I
Um,
mean, the only article on if Evergrande was such a big thing, there's one article. You know what the article says from 11 hours ago? One of the main units of it will be making its interest payments today.
okay.
So it hasn't. I mean, there's not a vortex that is sucking the globe into a little ball in China.
So,
So
that begets the question: was that really what that was about, or was this? Did we already get that washout from what the Fed's about to say, which is tapering's coming? Here it is, and is this going to be the?
I think they're two separate. I think they're two separate things.
Okay, I'm just playing devil's advocate. I'm just trying
Yeah,
to think through.
and it's kind of the same scenario. When anything runs hot for too long, it is somewhat of a bubble. We've had our real estate bubble here. China really hasn't had the same type of real estate bubble. Canada also had a real estate bubble, like townhouses, where my wife's family is. Her friend just bought a townhouse, not even a very big one. I think $1.25 million for a townhouse, and that's a decent price for one. So
Yeah,
they have a housing bubble there because of foreign investments. They've actually put taxes in to tax people that are paying cash for these things outright because they don't have the methods to invest in them. So bubbles exist. Bubbles are everywhere. And again, China really hasn't had one. All the numbers we see is like, oh, 13% growth this year. So, I mean, things are going to happen. And again, they're still, have a fixed currency. It's not free floating like everybody else. They're still claiming this like, oh, it's like third world status. We're still developing. You're not developing. You're like, the second biggest economy, but they're still claiming a lot of those rights. That's why we've kind of pegged them as a currency manipulator. Everybody manipulates currency, but they're doing it, claiming this exception over here, but then taking advantage of the other side. So they are due for these type of things. And
yeah.
again, they are large enough. If this 600, if it does go under, is it really a big deal? Is it going to affect the rest of the world? No, not really. It's not like China purchases debt. China doesn't loan debt. The United States, we sell lots of our debt, right? Everybody has it around the world, right?
Yeah,
It's the reason
yeah.
why it will be very difficult to move the U.S. dollar because if they do, the dollar's value will go to nothing. Means all the debt that China and Japan have would basically
Would
go
be
to nothing. So
right,
they're the
and
most motivated to make sure that doesn't happen. And everyone's like, no, no, they
correct.
want to replace us. No, it's not. They
So
own the debt. Their debt will be worth zero. That's basically the only way we're going to get out of that debt is if we take that away and then devalue the dollar to like nothing. But again, you mentioned, everybody has different opinions. Jamie Dimon is not a stupid individual. Jamie Dimon is very smart. People hated him because he was the evil overlord over there at J.P. Morgan that did really, really well from the last crisis, right? Because
yeah,
again,
maybe he's looking to profit from this one too.
yeah, and he says Jamie Dimon warns it's possible the Fed could be forced into a sharp move next year, sharp policy moves next year. And again, they haven't really done much. They've been very shy to do anything, hoping that it's all going to work out. Well, if you're using that hopium in the market, you tend to lose a lot of money very, very fast. So, and he's not the only large name that is called kind of a top in this market, and what could potentially happen when they start doing things. So, but again, that's why today is so important.
So let's just take a look at the charts. You've got the S&P
Yeah,
500 up. You had the S&P up there. Let's just take a look. Well,
yeah.
with a few minutes left, let's just take a look at the S and maybe the Nasdaq. I mean, there's two good,
Yeah, I would
technology
say
and
in the overnight they really didn't do much. They had a little push down, and they're basically exactly where they started for the UK session. So UK traders are not really going crazy with this right now. There's a level at 43.85 above. Question is, can it get up there in the next 30 minutes? I don't know. It depends because remember, there's typically that kind of like freezing effect on FOMC days because what they say is so important to the market, right?
right.
But I would say there's a decent level there. There's a decent one, a little bit lower. There's actually two. There's a 43.29, and then the level at 4,300, which is again that 4,300 number that
That's if we see a washout in the S&P, 4,300 would be a level I think that you would be one that we would see. I think, and if it were to drop down there, buyers would step in, and there would be a little bit of a pause. Again, do you expect to see any dramatic moves before the Fed goes on? Just
the only moves I would expect to see beforehand would probably be in favor of whatever they're going to say. You would see it positioning ahead of time. Remember,
because
yeah,
somebody got
somebody.
new.
Like I said, this is a pre-written speech. They know exactly what it is. There are people that have seen it. Yeah, I'll leave my political, tax
Somebody
the
out there
tax the
someplace
rich, and
knows
somebody else is
something.
investing. Yeah.
And then, of
So
course, all of our senators and congressmen are allowed to trade with reckless abandon based on any news that they get because it's not insider trading if they're trading on insider
Tesla,
information.
perfect example. $1 million position it was on all the news. Yep. And then 3 days, and then 2 weeks later, new policy comes out. Cancel the pipeline. You guys should go to electric. you and I did that, Todd, insider
We'd be in
trading. But
jail.
right, exactly. But so I would say again, look for bounces off those levels. NQ is kind of similar. You can see it's really flat. There's a zone that's been tested above at 15,156. You can see if it peaks down into this 14,950 range, there are some buyers there, and I'm on the 15-minute. There's not really a lot of great levels right now. A lot can happen in the next 30 minutes. I would say, I mean, if you're looking for like a really aggressive entry, there's probably one sitting down here. And again, make sure you guys have, you're using the right strikes for this one, so you're not taking on too much risk. But right now, the Europeans don't even know where the market's going to go. YM is kind of in a similar position. You're seeing YM is having some issues breaking through this 34,000 kind of 50 mark.
Yep.
People will see this and say, "Oh, I know what that is. I've seen this before." And again, I'm not going to go through it. We're not going to teach this, but
right.
You guys know what kind of what this is. So again, simple patterns out there. I would say kind of watch it. There's definitely sellers stepping in, making keeping YM from going higher. And Russell is Russell has kind of pushed up, and again, that same kind of consolidation pattern since the European Open. This one even a little bit more there, but it's back up into the a level where we saw yesterday. That 2,200 seems to be an area where the Russell doesn't want to go. Remember, the indice that's going to be affected the most by anything the FOMC says is going to be the Russell. The small companies are always affected more. They're not as insulated, more risk than the larger companies out there. So they start talking about massive amounts of tapering, having it completed by this year, and potential of raising interest rates the middle of next year, or just hypothetically speaking, if they say it's sooner than expected,
right,
that would not bode well for the Russell, which is up. Russell's up the most right now by 0.1% over everybody else. So.
All right. Well, with that, any questions for Nadex, please email us, customerservice@nadex.com. You can also email Brian. Brian is accessible at support@keeptradingsimple.com. And again, just a real quick recap. 10:30 a.m. this morning, oil inventory reports. There, Brian did speak about trading energies around inventory reports yesterday at the boot camp. That recording will be available if you missed it. But the synopsis was going into those events, any of those economic events around energy, you start with your 30-minute charts, check your levels, drop down to your 5-minute chart going into the announcement, and right as the announcement comes out, look at those 1-minute charts, looking for, and short duration binary options are a way for you to take advantage of those opportunities. Again, if you missed it, you'll have to catch that one on recording. The other is we're going to temper everything today because the Fed is speaking. They've got the FOMC 2 p.m. Eastern, and there'll be some prepared remarks. They're going to make a release. Then there's going to be a press conference at 2:30. So late in the day. And again, we're waiting to hear what the Fed has to say about inflation, unemployment, the timeline for tapering, because we know that that's coming, what assets they're going to taper, and then lastly, we'll get a glimpse into any potential future interest rate changes, probably our first peek into 2024. I mean, we're talking out years, but that will impact the markets as people start to react to that. So there should be some trading opportunity. With that, Brian and I will be back again tomorrow morning, and we'll probably discuss some of the washout from today. So we will catch you again tomorrow morning. Good luck in the markets, everyone.